Hey, what's going on, y'all? Good morning to you. Good, fine Sunday morning. In this video, as you can tell by the title, um, it's not gonna be graphic. I'm not a graphic person, so um, I just want to talk to you guys about this whole credit building process that you're embarking upon. First thing, let me say, if you haven't got a chance to subscribe to this channel, please do so. I try and make these videos on a regular basis to not just help you build credit, but to keep filling your mind with something positive because there's so much negativity out here. And, so if you can, just go ahead, please do me one favor. Subscribe to this channel. I put a lot of effort in bringing you guys this content. So when I want to talk to you guys about some mistakes that I made when I first came off of my bankruptcy. Well, there was only one big mistake. There was only one that if I had to do it all over again, I would have changed. And this mistake is also in my book that I'm going to be rewriting because I want to be clear on this one thing, and that is being a credit, not just a credit, but a financial hoe. What do I mean when I talk about a financial hoe? Just when I came off my bankruptcy, I didn't really have a strategic plan on how to build my credit. Like I had a plan, like I knew what I wanted to do, but as I grow, as I become more educated in this credit game, my views change, and I'm not the one to say that you know I'm too proud to say I'm wrong about certain things. And one thing is, when you're first start building credit, one of the most important decisions that you will make is who do you decide to bank with, right? Who do you decide to bank with? Who do you decide to get a secure credit card with? And sometimes we get into the mindset of we will we will apply for cards that are easy to apply for just because they're easy. Because we feel like, well, there's nobody that's going to be with us, so we'll just go ahead and, you know, apply for anything and everything. Not that I applied for a lot of credit when I came off my bankruptcy. It was some credit cards that, looking back, not even before my bankruptcy, just looking back on things, there is certain things that I wish that I would have did differently. And there's a card out there. It's Credit One. I'm not really happy with this card. It's a terrible card, and I just I when I applied for it, what I did was the reason why I applied for the card was because I was looking for a card to apply for that was unsecured after I had my secure credit cards. And I know Credit One is one of the easier cards to get, when you're talking about getting an unsecured credit card. But here's why it's so important for you guys to think about the companies you deal with. I'm in a situation now where Credit One charges me $4.75 a month, something like that. It's like $4.75 a month. And I'm in a dilemma now because I don't know if I should cancel this card. I don't really want to cancel the card because I don't want to mess up my length of history, right? So if I close my account, it's going to mess up my length of history and possibly bring down my credit score. But it's such a terrible card to have that I wish I never even applied for it. And I want to make this video for you guys so that you guys don't get into these cards, these secure credit cards, or even unsecured credit cards, in being desperate to get credit, just any credit. And so you say, well, I need credit, so I'll just go ahead and apply for anything. There's only one card outside of a bank that I would apply for when you're first starting out building credit, and that is the OpenSky secure credit card, right? And the only reason why I would apply for that card, I would apply for that card if I can't get into a major bank backed secure credit card. Everybody knows how I feel about the DiscoverIt secure credit card. So if you guys are starting out and you're in the high 400s, low 500s, and you're looking for a secure credit card, and you apply for the DiscoverIt secure credit card, right? That's probably the first credit card that I would apply for if you're just starting out, is the DiscoverIt secure credit card. So you go out, you apply for that credit card, and they deny you, right? They say, no, we can't. We're not gonna take you on. At that point, that's when I would apply for an OpenSky secure credit card. There's several credit cards out there, and I hope I don't get any trouble. I'm not talking bad about these companies. I don't want any defamation lawsuits or anything like that, but you have these smaller companies like the not Progressive, what is it? First Progress secure credit card, Merrick Bank secure credit card, let me think, Credit One secure credit card, or Credit One unsecured credit card. When you have institutions like this that you can't really do anything with but get a credit card and that's it, I probably would stay away from them, right? Because the reason being, one, their card isn't going to graduate. I don't believe the Merrick Bank or the First Progress, I know definitely the OpenSky secure credit card will never graduate. And that's something that you have to take into consideration when you're picking a financial institution that you're going to do business with. Is, what is our relationship going to be with, going forward? One of the best decisions that I made was Navy Federal Credit Union. If you have a chance to do business with Navy Federal Credit Union, and what I mean by business, I'm just talking about personal. Like if you have the ability to personally go to Navy Federal Credit Union, it doesn't have to be a business account. I'm just talking about doing business with them. Navy Federal Credit Union has been a godsend to me. If you have some type of way, I don't care if you have a family, a relative, somehow, some way, you have to find a way to get into Navy Federal Credit Union. Today's Sunday. What I'm going to do is I'm going to contact Navy, and I'm going to ask them, is there a way to allow friends, if I could sign friends up into Navy, just because I think that it's such a great institution to be a part of when you're trying to build credit, that it would be cool if I could get some people into Navy Federal Credit Union, because I know a lot of you are looking for banks that will work with you. And Navy, like I said, has been a godsend to me. When you are building credit, that's what you're looking for. You're looking to build a relationship with the bank. I don't care if it's Wells Fargo, Bank of America, Capital One, whatever it is. The reality of the fact, you're going to need a bank that you can go to later when you're ready to purchase a home or purchase a car or something like that, because you've built credit with them. They know your payment history. Like, you have a relationship with them, so it seems like it's more likely for you to get approved for other financial products. For example, I went with Navy, and like I said, they started me out with my car loan, and they just really helped me out. And now all my business banking is done with them. Like, that is probably going to be my main bank, is Navy Federal Credit Union, just because they've helped me out so much. Now, that all that being said, I don't want to make this a long video like I did my last video, but all that being said, I want to be clear of who I'm talking to, right? I want to be clear. If you are in the high fours, low 500s, I'm talking to you. If you're beyond that, then chances are a lot of the stuff that I'm talking about really doesn't apply to you, unless I'm talking about the mind shift, stuff like that. You see, I'm starting to get a little pushback from some credit repair gurus, I guess you could say, in the fact of that the way that I teach credit is not the only way, or is not the cure-all. It's not the cure to your credit problems. That deleting items is the cure. And I don't agree with that. I still agree the best thing that you could do for your credit report regardless is build credit, not delete items off your credit report. And I'm always going to say that. But I know you. I know who you are. I know what you're going through. I've been there. I've had the high fives. I mean the low fives. I think if you guys haven't got a chance to watch some of my older videos where I actually showed my credit reports, I think I was at a 520, 540, something like that when I came off my bankruptcy. And I wanted to show you guys how to build credit from scratch. If you guys haven't gotten a chance to go watch some of my older videos where I actually posted my credit scores and went through some of the stuff that, you know, you guys should be looking at, please go back and watch some of those videos, because the content is so valuable in your credit journey that it's going to give you your foundation. If you're a credit repair guru and you're watching this, right, this YouTube channel, I challenge you to put up any person that you've worked with, and all you did was delete items off their credit report and they went to 600. I challenge you, because I got tons of people in my comments in my YouTube channel. I got a lot of people that talk about how they went from 400s to 600s. Right? Like, the proof is in the pudding. I'm not going to sit here and like defend myself. All I'm saying is, if you truly believe that deleting items off of someone's credit report is going to get them to 600s, please show me, and I will recant everything that I said about deleting items off credit reports. I think it is a part of the credit building process, but it's not the first step. The first step in building or the credit repair process is getting your mind right, getting your budget right, then building credit, then going out disputing items on your credit report. That's it. Getting your mind right, getting your budget right is putting yourself in a position so that if we start building credit, you're not having late pays on top of building credit. Right? So that's the process on how I work with people when I'm trying to get them to think about building credit. And if there's somebody out there that thinks that it's a different way, that deleting items off your credit report should actually be please show me why. Because you're wasting a lot of time when you're deleting someone's credit and not having them build credit. So this video is not going to be that long. I just really wanted to talk to you guys about, when you're building credit, think about the institutions. Now I'm going to name some institutions that I really like. Of course, the major banks. If you're able to get a secure credit card with the Bank of Americas and all that, great. Wells Fargo, Capital One, great. My first two banks that I really like, one is DiscoverIt. I really like the DiscoverIt because it's the only secure credit card that I know that graduates and graduates quickly. Faster than most credit cards graduate. They seem to monitor your credit a lot more than all the other credit institutions. So DiscoverIt is a great secure credit card. If you are banking with Navy Federal Credit Union, I would definitely look at trying to get one of Navy Federal Credit Union secure credit cards. If you can't get those two credit cards or the State Department Federal Credit Union, the reason why I like that card because it's a really low interest rate for a secure credit card. I believe for a secure credit card, I think it's right around 13%. If I'm not mistaken, it's a very low interest rate for a secure credit card, and that's what I really like about the State Department Federal Credit Union. Now, outside of that, if you have local banks, if you can go to your local bank, like let's say you have a smaller institution and you go to them and you explain to them, hey, look, I'm just starting building credit. I would do that before I even went to the majors, like the Bank of America's, Capital Ones, and stuff like that, because usually your local banks will work with you more so than the Capital Ones, Bank of America's, Wells Fargo's. Those larger institutions going forward, even when you start establishing credit and getting your credit together, those larger institutions, they're really into it for profit. They're really trying to make money for shareholders. And in doing so, their underwriting criteria is going to be a little bit more strict. And their interest rates are going to be a little bit higher than your local institutions or credit unions or stuff like that. So these are just some things that I want to, at least put in your mind to start thinking about. And don't get so desperate that you will just, lay down with any financial institution just because you feel like you can't get approved. And I'm telling you, if you can't get approved for the DiscoverIt, get the OpenSky, get a SelfLender account, right? Or if you don't want to sign up for SelfLender, let's say you want to go to your bank, your local institution, you can get an installment loan. Like you're just trying to build credit. You get an installment loan and you put down, like let's say $500. You tell your bank, your local credit union, hey, look, here's $500. Hold this in a CD, and can you guys give me a loan? And they'll give you a loan right there. And just have like one installment loan, one revolving account, and let that build your credit. Rather than feeling like, okay, I got to get 3 secure credit cards and I'm going to go lay down with any financial institution. I'm going to go get a First Progress, a Merrick Bank, and, because I know they're going to, chances are they're going to approve me. That's the wrong way to think about it. Because once you start getting to the point where you're building credit and you seeing that you have this terrible credit card, now you're stuck with the decision of, do I really want to delete this credit card off my credit report, or do I just keep it and pay that, $30 $30 a year, to keep this credit card. And it becomes a pain because as you go forward, you're starting to think, man, I really wish I never even applied for this credit card, because it's not going to do any benefit for you going forward, right? So it only could take money out of your pocket. So like I said, I didn't want to make this video too long, but I really want to keep you guys motivated. I really want to keep you guys thinking about credit, building credit. I don't care what kind of financial or situation that you're in. You could build credit, and you could build credit the right way. You don't have to run, to any financial institution and just say, "Hey, look, take my money and give me some credit." Let's you know let's start thinking a little bit more about the companies going forward that we want to work with, and think in your head, well, what companies do I want to belong to? What credit cards do I want to have in the future? Do you really want to have a Capital One credit card? Do you really want to have a Merrick Bank credit card? Do you really want to have I don't know, a First Progress credit card? So these are things that I want you guys to actually think about when picking these financial institutions. And like I said, I'm not going to keep this video too long. If you guys are looking to build credit, please go in the description of this video and you will find my book, Credit Anatomy. Now, I will have some cards in there that you can apply for that I probably wouldn't, choose today. If I get a chance to finish re-editing my book, I'm going to change some of those credit cards that are in that book because I just wouldn't apply for it. I think I have the Merrick and the First Progress credit cards in there as credit cards, and also I think I have the Capital One. I probably wouldn't start with those credit cards, like I said. But if you're looking to get started building credit, go in the link. The name of my book is called Credit Anatomy, and it's going to be a link that will help you get started. And once you sign up for my book, you're going to get 15 dispute letters as a template. And I know you're not supposed to use templates. There's a lot of credit repair specialists out there saying don't use templates, but it gives you a good idea of what to write in your letters. It's better to do something than nothing, right? Because if you don't know what to write, chances are you're not going to write a letter to the credit bureaus. And I just want you guys to really have all the tools at your hands to be able to, start building your credit and getting yourself back on track. All right? Like I said, I'm not going to stay too long. There's a link in the description for my book if you guys want to download my book and join my newsletter. Probably one of the best newsletters out when talking about credit. All right, I put a lot of time into this, like I said. So I don't ask you guys for money. All I'm asking for you guys to do is give me a like and subscribe to my channel, and I'll do my best to keep bringing you guys this content and help you guys stay motivated in building credit and keeping your spirits up, because sometimes when you're trying to build credit, you get down on yourself and you get anxious. Oh, I got to apply for something. I got to apply for something. Just be patient. Just be patient. It's going to come. And as you start building credit, and you start seeing your scores rise, that's when you're going to become confident, and that's when you will thank me. When you stop and you say, no, I'm not going to apply for this Credit One card or this Merrick Bank card or whatever, and you pick the institutions that you want to do business with. Whether it's, I'm going to wait a little bit, or maybe you have to do a secured or whatever it is. All right, so you guys have a wonderful Sunday morning, and I'm going to catch you guys on the next one.